Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. I am back home. I am done with the traveling for a little bit, actually. Haven't shaved, so forgive me. Anything I say is not a suggestion for you to buy, hold, or sell. And I got home at 3 a.m., so I am going to take a cat nap after this. So forgive me if I make any mistakes, okay? So we know that this is sponsored by me, Stock Up U, Stock Up University. We have decided to hold things at its current price a little while longer. So get those, download the top link below and get the class. And we also have Moo. And as you can see, 15 free stocks. Make sure you scroll down and read these so you get the 15 free stock based on your deposit amounts. As you can see, $100, 5, and then you can see $1,000, 15, plus free premium courses. Okay, so let's talk about what's going on today in the market. There is a gentleman that I agree with 100%, though that is very hard for me to find someone that I agree with. So there's so many people that are not telling the full truth. I believe that Janet Yellen is just yelling. She ain't telling us the truth, though. Fed Jerome Powell is doing the Fed thing, but he's not telling us the full truth. And as we know, they're just doing what they do. But you and I just need to know how we can make money in this market, right? And that's the only thing that we're concerned with. So they can stop all of that bumping of the gums and just shoot it to a straight. I have been constant in saying that I believe that the Fed will pivot, of course, this summer, which we are in spring now, and I believe that they will do a reversal by the end of this year. So what I'm going to do is I'm going to play this video. You know what? Before I play this video, it's important for me to read this to you guys so you'll know what he's talking about. Here, Fed's Mester says rate targets will need to go over 5%, right? Let's read a little further here. April 4th, Reuters report, excuse me, Federal Reserve Bank of Cleveland President Loretta Mester says on Tuesday that the U.S. Central Bank likely has more interest rate raises ahead amid signs that the recent bank sector troubles have been contained, right? You and I know it hasn't been contained. There's another shoe to drop. Let's read further. To keep inflation on a sustained downturn path to 2% and keep inflation expectations anchored, Messer says she sees more monetary policies moving somewhat further into restrictive territory this year, with the Fed funds rate moving above 5% and the real Fed funds rate staying in positive territory for some time, right? So that's what she thinks, okay? So now let's see if I could get this to play, and I want you guys to listen to this dialogue.
Coming from somewhere, and the Fed is going to buckle and is going to start cutting rates before the end of the year. She is not going to get the interest rates going substantially higher than 5%. Why do I say that? You mentioned at the beginning of our discussion, look at the 2-year and the 10-year.
Sorry, good people, let me bag that up a little bit because you need to hear everything that he's saying.
Global strategies. Do you believe Loretta Mester at this point, Shri, and what's the motivation? Do you think she really believes that that is the case? Is there some massaging of the markets by Loretta Mester, or how do you take her comments, Shri, and do you think that is where we go?
Good morning, Joe. First of all, I think various Fed governors, presidents keep making statements contradicting each other. I'm opposed to their speaking publicly. All that does is to cause confusion. Now, going to specifically what she said last night.
I agree with him. I'm opposed to them speaking publicly because it just causes more confusion because one says this, one says that. One is bullish, one is dovish. One is hawkish, one is dovish. One is bullish, one is bearish. All right, let's keep going.
She may want it to go a lot higher. It may well be her preference, but I don't think she's going to get it. We have already had one credit event in the form of the banking crisis. I think within the next 3 to 4 months, I think we'll have another credit event coming from somewhere, and the Fed is going to buckle and is going to start cutting rates before the end of the year. She is not going to get the interest rates going substantially higher than 5%. Why do
I agree. The Fed will start cutting by the end of the year, reversing. So neutral in the summer, reversing. Let's bag that up because that he is exactly what I think is going to happen. Now, just because I think it's going to happen doesn't necessarily mean it's going to happen, but it's what I think.
Cutting rates before the end of the year. She is not going to get the interest rates going substantially higher than 5%. Why do I say that? You mentioned at the beginning of our discussion, look at the 2-year and the 10-year. Both of them have fallen, and the 2-year was above 5% just about a month ago and has now fallen below 4%.
All right, let's go back here. Let's look. Now, he's talking about the yield curve, which is still a threat, okay? It's still a threat. Let's go back and see if we could get that. Let's go here. Now, let's look at that. We see the 2 and the 10-year, right? The 2-year is paying a greater yield than the 10-year yield, okay? So you're making more money in a shorter period of time, which is the reverse of what should be happening. We should be making more based on us holding it long. That's a sign that a recession is still in the works.
And the 2-year was above 5% just about a month ago and has now fallen below 4%. Second, the 2 to 10 yield curve inversion peaked at minus 110 basis points a month ago. Now it's just half that, minus 55. The yield curve typically steepens and is still staying negative when it expects a recovery from a recession. So what the yield curve is saying is expect the recession to begin in the second half of 2023. Look for a recovery.
Just like I've been saying, I agree with him. Second half of 2023 is when I expect the quote unquote recession. Now, I say it's a deeper recession. I believe that we're already in a rolling recession. He is 100%. I found somebody that I agree with 100% and aligns with what I've been telling you guys consistently.
Somewhere close to the mid 2024 point. Lastly, the DXY, the dollar index, has fallen sharply in the last few days. It has gone down quite a bit over the past month. And that is also saying to me that the dollar holders do not believe that the Fed can tighten much. So a lot of reasons, Joe, why the Fed is going to remain relatively easy, no matter what may be the hawkish messages they give in public.
Do you think, we talked about Jamie Dimon a lot yesterday, and he made some comments that to me seemed like they were mutually exclusive for the other. So he thinks that we're far from over in terms of this, what he calls a crisis in the financial sector, but still thinks inflation is going to remain stubborn and that we're probably headed to higher rates than people think. I would think that if the crisis continues, not only does the Fed take a lighter touch, but it also does some of the tightening for the Fed in terms of credit contraction. So I don't really see how that's logical, that thinking, that thought process.
I would agree with you rather than with Jamie Dimon on that. I think the banking crisis is disinflationary. If you have one more credit event, whatever that may be, that is going to push inflationary expectations down even further. And I
agree with that. One more shoe to fall, and actually inflation will fall too. I believe it will happen in the banking, like I've been saying. This gentleman I agree with wholeheartedly. And you can watch the whole deal. I don't want to bore you with the whole video, but I just wanted to show you guys that there is someone out there that aligns with everything that I say. Now, just because I say it does not mean that's what's going to happen. But we have to look at what we expect to happen. That's what TA is all about. Technical analysis is all about. It shows us a pattern, and it shows us where the flow is and what could happen. That's how like Stocks with Josh can predict where to buy a stock and where to get in and where to get out. And you compile that with doing all your fundamentals, then you could make a educated decision on your plays. Okay, so those are the things that I wanted to share with you today. I thought it was important enough to make a video today. I was going to skip it. Let's look. We have about 40 minutes before closing bell. It is Wednesday, and as we could see, the Dow is, let's do a refresh here. The Dow is 53 points. S&P, it's a pretty flat day. Look at that. I would call that a pretty flat day. The NASDAQ is down bigly, as someone would say, 1.33%. So the NASDAQ is not doing well. But the S&P is pretty flat. Dow is pretty flat. And that's what I wanted to share with you guys, man. So that's it. Hey, make sure 2 things that I want you to do before you sign off. Number 1, check out Moo. That'll be the second link below. And then the top link below will be Stock Up You. You let me know what you think is happening with the market. What do you think is going to happen for the rest of this year? Because based on what you think is going to happen, that's how you should be investing. So I made a video on yesterday at the airport. I think it's equally as important as this video. I will leave that video in this corner. Actually, I'm going to leave that video in this corner, and then the links will appear in this corner, okay? Hey, I'll talk to you guys later. Make sure you leave me a comment. If you're new to the page, go ahead and hit like, subscribe, notification bell. I'm Stock Up with Larry Jones. Come join the family. And if you've been rolling with me for a while, you guys know I'm one of the hardest working men on YouTube. I don't care if I'm on a mountain, I'm going to keep the family fed. Love you guys. Live, love, laugh, and learn.